Without an additional shot of adrenaline, this economy doesn't stand a chance. Will there be more? You came here for the truth, so let me unveil that for you. Today we're going to get into the big issue, and that is the grand disparity, the wealth gap, the inequality that you've heard about that was experienced, basically 100 years ago, the roaring 20s. And now we're getting into essentially the same situation. And this shouldn't be this way because you've got this group of people who have made more money than ever before. You've got the 401k millionaires, a growing number of people that have seen their portfolio grow. But of course, that really all hinges on the Federal Reserve continuing what they've been doing with their quantitative easing. So how will this end up? We'll talk about that today. That leads me perfectly into the Fed repo situation. This is absolutely key and critical to understand. I've got a lot of people who were not around on the channel back in 2019 where I went in depth on every aspect of what we see. But this right now with the reverse repo operations that are going on today, by the way, let's just get into that. I'll show you that first and then I'll explain it. Reverse repo operations go down. You could see on this right here, the delivery date and the deal date, May 25th, the maturity date, May 26th. That's a one-day operation right now, $433 billion. That was, I believe, the third or fourth highest. I think it's the third highest ever, as well as it being the highest not at the quarter end. So you could see that this is clearly in a situation that we basically have not experienced before. Many people have asked, what is this thing? I hear you talking about it. I don't know what it is. I'm unsubscribing. I love those. Financial institutions flush with cash have flocked to the Federal Reserve's reverse repurchase facility, which you might see online referenced as RRP, loaning the U.S. central bank money at 0% interest and raising concerns in the bond market that key short-term interest rates could actually fall below zero. What the Federal Reserve has done with their mortgage-backed securities and with the treasuries has annihilated the actual market and what they have done. Look, there's a market which, you can agree that this is a free market. Definitely, obviously is not anymore. But over this period of time, the way that they manipulate interest rates and, let's just say, all right, it works somehow. I think this is nonsense. But anyway, the way that they do this has been completely turned upside down because of how much they've done. People have always said, well, they're just print more money. And some people do agree with that. Some people who are very wise and knowledgeable about the situation suggest that there could be more money printing, but there's a lot of fine print around that. There's a caveat around this that people need to understand. It's not the nuances, that are so important. But anyway, the point is there's so much more than just, well, they'll just print a whole bunch more money. It doesn't work like that. It really does not work like that. And people need to understand. So keep a close eye on that. Look, I got a lot to cover. I'll try to do a separate video about that. Like I said, I want to show you what's happening to consumers. Okay, because you get the technical stuff happening, the reverse repo operations that people are asking, this has nothing to do with me, but trust me, it does. Okay, I've been looking into this stuff a long time and I've been dealing with a lot of the insight on this and trying to really, really scrape apart what we see on the surface level and going down a level or two deeper. Let's break this down. New one-family houses sold month over month. Don't look at the blue line, which is the year over year. Obviously, 1 year ago, there was no houses being sold. So that's going to look obviously massively skewed. But you can see the month over month. And that was actually in the red, if you can believe it or not. U.S. new home sales fall by more than forecast as prices surge. Median home prices jump from their low by the most since 1988. Okay? Interesting. So the prices are doing one thing, but what's actually happening? The number of homes sold, not yet started, is the highest since 2006. So we need to realize what's going on. You could see the chart that corresponds. High costs, sales of new US homes declined while prices picked up in April. So the prices are accelerating, and that's part of it. People can only have so much cash on hand, but we do know that they are expanding their mortgages. I don't know if I brought that on the channel at one point, but anyway, I had that article at some point basically just saying that mortgages are getting bigger, but we didn't need to see the stats around that. I mean, I think it's pretty obvious. U.S. consumer confidence falls as job income prospects ebb. This is part of this growing issue that we are seeing where a lot of people simply aren't taking the jobs. They're saying, I'm not going to go work at McDonald's for minimum wage. It's not worth it. I want to do something else. I want this. I want that. And so you're seeing some very big problems in the job market today. Confidence Board Index showed confidence little changed in May. Gauge of expectations fell, but current conditions improved. So there's of course, so many different indicators that we can look at. These are just the statistics around it. I'm just making the point very clear in what we are seeing today. And really, I think it is critical to understand what's happening underlying all this, the psychology behind it, but then bringing in the fundamental analysis that we do on a regular basis that gives you the whole picture. Look at the prices of homes right now. This is the Case-Shiller Home Price Index, and you could see it's very obvious that as time has gone on, we have seen an acceleration. If I pull up the 25-year chart, we've blown past what we saw during the bubble of 2007 and beyond. So this time frame here is very unusual because you've got such a large group of people who are heavily in debt, who haven't paid back any of that debt, who, because of all the eviction moratoriums and so on, are able to still be there. But let's be honest, poverty has increased. If they can't pay their bills and they, in a sense, under normal circumstances, would be out on the street, imagine how many people today would be out on the street if these different policies weren't put in place. I mean, that is an increase in poverty. And just because the government puts this in place doesn't really change that. These people, a majority of them, are in serious, dire straits right now. Looking right here, I believe that's the same chart I had pulled up previously. Consumer spending intentions. This one surprised me. Consumer buying plans in 6 months. And you look at homes, appliances, and automobiles. All of these are down. Now, as you can see, this fluctuates very, very heavily, but I think it's clear. Looking at all of this tells me something about the way that the customers are viewing the remainder of this year. So let's break it down right here in the Money GPS Insights. Number one, we have to understand that consumer confidence has fallen, and we have shown this on multiple indicators. Number two is really key because as the stimulus has faded, so have hopes. So when the stimulus was being pumped out left, right, and center, you had people going out, they were spending, they had the savings there, and this was really continuing on, and you saw consumer confidence at highs it had never been before. But as soon as that stimulus check went away, people spent it up on things they needed to, or maybe things they didn't really need to, but regardless, that was being spent up rather quickly, and there goes the hopes. And then we have number three. What you need to know as an investor is very important, that when you have the promise of more stimulus, which I believe we'll talk about more in a moment, that is going to push markets higher. They'll love it. I'm talking about not just the quantitative easing, not just the Federal Reserve side, but understand when the government comes through with a package of any kind, it is always going to push things higher or at least keep it from falling. Although not many will cover this information, I personally think this is extremely important. Los Angeles Port progress reverses as more ships join the queue. For people who are not importing and exporting, they don't really understand the value in this information here. That's why I had shown you all different indicators surrounding this previously, but you got to understand where products are moving to and from, and understand, not just the dollar value around it, not just which companies are around that, but it gives you a sign of geopolitical tensions. Look at what we saw with the tariffs between the US and China. There was so much data surrounding that, particularly, let's say, with the whole trade agreement that never happened, and all of the soybeans. I was showing you data from Refinitiv and so on. It was really telling to me anyway, but some people love data like me. I mean, it's fantastic. I don't know. Some people like to watch sitcoms. I like to look at charts, whatever. Ship arrivals reverse recent progress in reducing the average weight at anchor edges down to just under 6 days. So here we have it, as you can see right here, and what they're referring to, if you can see that little spike upward, maybe if I zoom in a bit better, pull out the highlighter, it's just showing you that this has spiked up somewhat. And I think it's important to note this, of course, but it could reverse really quickly. I just wanted to bring you an update on that. I think that knowing what's happening with the shipments gives us a little insight, and also it's kind of like a delayed reaction for what's to come, because you can kind of see before it happens using this data. Republicans plan to send Biden nearly $1 trillion infrastructure counteroffer this week. So they originally had a $1.7 trillion proposal /600 billion from it. They're looking at approximately $1 trillion infrastructure plan. We'll see what happens. I mean, initially they were talking about $4 trillion in total. And now with this particular package here, it's down to $1 trillion. Of course, the initial thing isn't always going to get squashed down, but we'll see what happens. $1 trillion is still a lot of money, and the markets may look at that very, very favorably. Quick update just showing you SPACs apparently not getting any love. The main SPAC exchange traded fund, Defiance Next Gen SPAC derived ETF, has shed 28% of its value in the past 3 months. 3 months, okay? So the SPACs, of course, as they say right here, we're looking for more quality opportunities. So that bubble, that may, in a way, may be the peak of the bubble in some ways. We'll see. Speaking of which, you're looking at Bitcoin traders using up to 100-to-1 leverage. They're driving the wild swings in cryptocurrencies. Whether or not that's true about the swings, that's besides the point. But this right here, the reason I mention it, is talking about leverage. Leverage is extremely, extremely dangerous. And I would always advise people to be very careful. If you are thinking that, you know what, I missed the boat, I need to double up on my bet, I need to get in right now, I need to do this. It's not a wise move. Do what you can with what you have right now. Don't push it. It's never a wise move. It always ends badly. Bitcoin crash opens door to a tax loophole for investors. I don't know if people are aware of this, but because of the way that it's taxed in the US, it's not the same as a stock. Okay, because it's considered like property. Instead of different assets like this, as they mentioned in the article, people can sell and buy back right away. So they take the loss and then they're purchasing right now at this price again. So if they want to get away from some of the taxes at this time, at least with their gains up until this moment, they could use the loss that was experienced recently. That's what the article said. I think it's just interesting. That's all. Look, I want to talk to you for just 1 second here. If you want to be able to get to me directly and I want to get to you directly, you've got to sign up for the Insiders. It's free, okay? So this is an email, 5 days a week. It's going to come to you and you're going to get my video. I hear from people every single day all around the world that say, I didn't receive your video. Hey, I noticed after a while that you weren't posting, so I decided to go to your channel and there you were. You had been posting every day. What happened? I'm subscribed. I got the bell. Other people told me, I got the subscribe, I got the bell, and I never see your videos. So we know there's something fishy going on. And it could be part of a shadow banning. It could be, different things, just the algorithm's not picking it up. Whatever the case may be, if you sign up to the insiders, you basically get that to your inbox, and then it will take you directly to my website instead. So you can actually view the video without even having to go onto this platform, which we know is silencing those speaking the truth. So if you want to get on, no more ranting, check it out. There are now thousands of people, by the way, who have already signed up. So I want to thank you and really thank you all for signing up for me to basically get around the system. That's the whole point. I'm trying to get around the system. Okay, I talked about it in yesterday's video, turning off the ads very soon. Hopefully, I'm gonna go and do what I can. Okay, try to just create the best possible scenario for everyone. If you found the video informative, hit that thumbs up button. I appreciate it very much. If you haven't seen this video already, you definitely want to click it, and I'll see you there.